Hello, today is Friday, the 5th of December, 2008. This is Brian Shannon from Alpha Trends. The market has been closed here for a bit and a strong session. The NASDAQ 100 was up 4% today. Real nice session here in the last couple hours. I wasn't trading today. I took the day to go skiing where there was just incredible powder, by the way. But here in the last 2 hours of the day, let's look at the 1 minute time frame. You can see that the market started out with the unemployment number weak and continued to sell off. What we saw happen, though, was that the lows from earlier in the week did hold and attracted some buyers in there. The market then stabilized just below this daily VWAP. It retook it, kind of didn't really get started quite yet because midday activity, but then right here about 1:30 the buyers came in. It brought it one step higher, right up to basically the highs of the day, and then we really saw the volume come in and push it higher. So we saw higher highs and higher lows, and it closed right near the highs of the day. So the encourage is choppy as this market continues to be on a daily basis. There were somewhat encouraging signs for the week. The Nasdaq still was down 0.62%, but when you figure in that huge drop on Monday, it actually made up some pretty good ground. And if we take a look at the volume weighted average price for the week, it was down here at about $27.90 or so. So the buyers, are continuing to show some encouraging signs here, as I've been speaking about recently. It doesn't mean that it's something that you can buy into and hold on to, but we are seeing that the higher low does continue to hold for now. So this level becomes even more important going forward. Breaking back below $27 a share could be devastating for this market, and that's going to be very important here over the next couple weeks, I think. So keep an eye on that, and the higher high really comes in right around that 29 and a half or so. This high was actually, what was it, $29.36. So let's say about $29.40. If it can take out that high, perhaps it can get going a little bit. If we take a look at, this is pretty interesting, we can take a look at the election high right here. And I'm going to draw a volume weighted average price line, and this is going to give us the average price this market's traded at since the election. Basically, we're right there at it. So even though we're significantly below those levels, the average price that the market has traded at right in here is right around that $29 level, which tells us that we're building a little bit of support in here, and if it can get above that, perhaps we're going to get that rally up towards the 50-day moving average, and we can look, we're back above the 20-day moving average now, which had been, finding some sellers there yesterday. But now on the 30-minute time frame, we've got to look again at this inverted head and shoulders pattern, and you can see it's basically right on it. Do you call it broken or not? I think it's more important for the market to take out this level. So it's just not going to be easy as buying above that neckline, because where does that, this breakout occurred at $28.90 basically. Did you really want to buy it right at $28.90? Wait till $28.90 after this huge rally had already taken place? And the obvious answer to me is no, you do not want to wait for that to happen. The 5-minute time frame was super choppy in here. Obviously, you have to find sense on these very short-term time frames, because it's just not there when you try and make sense of this. The best thing you can say is that we're trading in a range of 27 to 29.40, and maybe breaking out of that range could lead to some further upside in here. But there are, continuing to be some encouraging signs. Today, the 21 stocks advanced for every 9 that were decliners. So, I heard there's bad news, and bad news often comes out at bottoms. How much worse can it get? Well, I think, the answer to that question is going to elude us for a while, because we don't know how bad it can get, how long. But it's, price action that pays us. Breaking past that $29 level would also bring us back up above this trend line that basically from the early September lows on down, and we can take a look at what was the average price since that breakdown. Perhaps we're heading back up towards that. That would be obviously very optimistic to think that it could get up to 34.5, and I'm not going to suggest that that would be the case. It still remains a short-term trader's market in here. If you had looked at this 5-minute time, this 10-minute time frame and tried to make some sense, the best thing you could say is that we had support at that $27 level. But in here, it starts to make a lot more sense. You see the big volume rallies, the lower volume consolidations, big volume again as it rallies, low volume as it consolidates, and then heavy volume once again. So the market is behaving bullishly on a one-day time frame at least. So, that's about as encouraging as you can get in this market. The oil market, there's just no sign of encouragement there. We come down on heavier volume each day, and today this oil lost 3.2% on the USO. Obviously, it remains in a horrible downtrend. The only thing bullish I would say is as a potential contrary indicator is if you look at something like the front page of Drudge Report, it's talking about $25 a barrel oil and all kinds of bearish oil pieces, which usually are a lot of times a good contrary indicator. Looks like the market started trading some heavier volume in here and holding above this $33 level, but nothing to be bullish about. People have been asking me about the DXO. Do I think the DXO, can it go to zero? That's a good question. I guess theoretically it could go down to zero, but a lot of people have been telling me that they've been buying this because they think long-term oil will still be in favor. There's no reason technically to buy it. This ETF is trading massive volume right now, so I think that there's a lot of people positioning for it, and I think that's the better way because at least the absolute dollar amount that you can risk. But percentage-wise, again, this thing was down 9.2% today. So be very careful with these inverse ETFs if you don't understand how they work. The Russell 2000 was up $2 or 4.6% today. Nice big green candle in there. This market obviously held above these lows as well. So we have what appears to be a higher low. We're also above these lows right in here. We can take a look at some trend lines like this one here on the daily time frame. We can also look at the volume weighted average price since the election was we're above that now. So for the Russell 2000, the average purchaser since the election is now in a profitable position. That lends to the theory that we're creating some support in here. If we take a look since this breakdown here, the average price is right about at that 50-day moving average, which is kind of interesting, near about 51. Looking at the shorter term time frame, on the 30-minute time frame, we see here that this trend line that forms the inverted head and shoulders pattern has not been broken. A double right shoulder, which if you read the books, you'll see these patterns take on all kinds of formation. It's not the formation again that matters so much, but what's happening under the surface. We're getting, we've got resistance right here. We've got support in here. The $42 level did hold, so that's important because again, these lows from this week, particularly since they've been tested once or twice, once here on the Russell, twice basically on the Qs, are going to be very important next week. Breaking below that, be very defensive. I think getting back above here in this gap level is going to help add to the bullishness, and perhaps this is really above the $48 level. Maybe that's where this market really begins to pick up some upward momentum. But again, we're seeing encouraging signs, I think, on all of these markets. It doesn't mean that I'm bullish, okay? We've still got declining 50-day moving averages, and all rallies are guilty till proven innocent, but we can see some just amazing rallies in this environment, as we have seen. So they're worth noting, and they're worth paying attention to and positioning yourself in, but they're not something that you should look at and have your confidence grow and think that that was the bottom, because bottoms take quite a while to form. The semiconductors also held, on a closing basis above the important support that we've seen in here recently, right around that $15 level. Looking at the 30-minute time frame, you can see initially it got slightly below it. in this market. Again, the $17 level is the most important resistance for this market in the near term. That's these lows from back here that were also tested as resistance. If the market gets above that $17 level, I think that it wouldn't be unreasonable to see the stock, the semiconductors run up towards that declining 50-day moving average. It would do nothing to change the fact that we're in a downtrend, but it would be a very nice trade opportunity. The average price since the election high is actually right there, coincident with that $17 level, which adds to the significance. So, say we can go back to the early September breakdown, and the average price is coincident with this prior little level of resistance. So we're seeing encouraging signs. The charts are still a mess right now. The semiconductors, important support is at 15. Important resistance that if broken might lead to further upside is at about that $17 level, and right now we're just smack in the middle of it. So nothing to get excited about. The financials had a good day as well, and the financials were actually up on the week. They were up 1.1%. Obviously, we see the $10.50 level did hold here on the 30-minute time frame. Looking at the daily time frame, though, we've got the much more significant level of resistance here at $13 a share. We've seen that it was tested numerous times as support. We've seen one test here, another test. It's looking a little more bullish short term. We've got the higher low. The market, comes down, found buyers at 8.5. It rallied up to that prior support at 13, and then it pulled back down to 10.5 before the buyers regained control. The time between these tests of resistance is also lessened, meaning that buyers are getting more aggressive not only price-wise but time-wise, and perhaps we're going to see a push past this level at about the $13 area. And we're basically just right below it. So this market, next week, it was the strongest of the ones that I look at that this week, as we did see a positive week for it. But the more important level is that $13 area. Getting above $13 a share. Let's take a look in here at the VWAP since the election, because obviously the financials are the ones that everyone's watching and where we might see some bullishness materialize from if this group can hold up and we're back above the average price. This is the VWAP since the election right here, so the election peak. If we take a look at the VWAP since the rally before the election, you can see we're above that as well. So the financials are showing some better signs of showing holding on to their gains, and that 50-day moving average is right up here at about hold on, I'm just going to switch this here. At about 14.5. It's not that far away. I mean, with the percentage moves that these markets make, that it's looking reasonable that it could make it up to there, and I think that it would be very good for the intermediate term health of this market to jump back up above this $13 level, and then maybe create a new range of $13 to $15 a share. It gives this 50-day moving average time to kind of come down and flatten out and continue with the healing process. Again, nothing bullish here. For as far as the longer term trends go, these are going to take a lot of time to heal. Short term trading is the way that I look at this market. We've got trend line that has been holding, and this group was really strong all day, which is pretty interesting. That it gapped lower, ran up immediately, tested that little low, and then this is the group that obviously really began to rally first, and I think gave people confidence to buy the other markets as well. The S&P 500 did hold above that support at 82, the recent low, so we have a higher low at 82. This level is going to be very important next week. What would actually be nice to see is maybe a dip just below 82, and then a little shakeout below there, then a blast higher. But that's reading into it too much. The important resistance here is at about $91 a share on the daily time frame. If we take a look at the volume weighted average price since the election, we're above that here. Since the rally before the election, we're right at that, and since the let's take a look at, basically since this breakdown here, that level is still looming large at about 92.5. So we're seeing encouraging signs, but it's let me change that to a regular trend line. We're seeing encouraging signs. This is really, we can draw a horizontal line across there. We can kind of go like this and see that, these are the important levels of support first, and that's what you have to look at first, because that's, being defensive. Getting above this level, the close a week ago Friday, I think it's going to encourage more people, and we're getting into this holiday season which is typically bullish. So we're in a bear market. We're showing signs that maybe we're going to continue to bounce, but it's just really way too choppy, in my opinion, to try and buy these things one day and hold them for more than a few days. It's just too choppy for that. I think it continues to be a day trader's environment.